Good morning and welcome. Patriot Radio News Hour, Joe and Jason on this Monday. It's a holiday week, Thanksgiving right around the corner. I know my wife she's on cloud nine because both my boys are going to be home. Normally we have Joey with us today. He's not going to make it again. He's got meetings, and I think that's a great thing. You need to get your 401ks, your IRAs rolled over to Joey, 602-909-9048. This is the thing. Having it with even like, well, I got it with Schwab. Schwab's not a bank. Oh, yes, they are. Yes, they need to get bailed out. So they had to be made a bank. Or, J.P. Morgan, B of A, all of these other things. I want to remind people. Do you know why Lehman went under? I mean, we know why, right? Because, they were doing all these loans, liar loans and all that stuff. But it wasn't actually Lehman Brothers. It was two Bear Stearns hedge funds that imploded in August of 2007 that really started the whole decline there. So having somebody, when you look at, well, who didn't need money? Who didn't need money? Because they all did, right? They went, well, J.P. Morgan didn't need money. Yeah, J.P. Morgan got bailed out. They got a lot of money. Matter of fact, and then, of course, they got gift-wrapped all of the stuff that wasn't horrible at all these other places that were going under. But it's why Joey went to Northwestern Mutual. They are not a bank. Never going to be a bank. They're not publicly traded. Yeah, things like that. They've got a higher rating than the U.S. government, right? I mean, they blow away all the ratings of any of the financial institutions. So, yeah, if you want to make sure you're prepared for the next big crash, 602-909-9048. That is Joey's number. But Jason, just a quick announcement. We will be closing early on Wednesday, and we will be off Thursday and Friday. Patriot offices will be closed Thursday and Friday. The radio station will be closed Thursday and Friday. But don't worry, you can go to allamericangold.com and order 24 hours a day, 7 days a week. But it will be a short week for Jason and I. Today, tomorrow, and Wednesday. Then we'll be off Thursday and Friday. 800-951-0592. And Jason, kind of a day of rest, if you will. I'll call it, some light profit taking in the gold and silver markets after last week's big run. Wall Street, pretty quiet. We don't have a lot of economic data out, but today we had the leading economic indicators. We don't talk a lot about this number, but you get it every single month. And we've been putting together this timeline about crashes, the boom and bust cycle. That we didn't create this. You didn't create it. I didn't create it. I know this. None of us asked for it. We didn't. But there's a pattern to this cycle. And the pattern, by and large, there's a couple of exceptions here or there, but by and large, boom, bust. Boom, bigger bust. Boom, even bigger bust, right? You get the idea. And there's signs that go along with that. One of them we talked about last week, the inverted yield curve. What is an inverted yield curve? That's simply put where the short-dated notes, when the Fed goes to borrow money, 3 months, 6 months, 1 year, 2 year, those should have the lowest rates. In other words, while you're not borrowing money for very long, you should take less. It's when those notes yield more than the 10-year note. That's called a yield curve inversion. And last week I told you we've already surpassed the second longest yield curve inversion in history, which, by the way, was the financial crisis. And I told you last week, I think it's January or February of 2024, we will take out the longest one. What was the longest one? Oh, that was the Great Depression. Today, we get the leading economic indicators. It is down now for the 19th straight month in a row. Now, I don't think they had the leading economic indicators during the Great Depression, so I don't think that applied. Right now, this is the second longest streak of consecutive economic leading indicators, second only to, you guessed it, the financial crisis, which, by the way, went 22 months. So this was an October number, so let me see. November would be 20, December 21, 22. Look at that, Jason. We'll also take that out in early 2024. Kind of interesting how these things kind of go, and you can kind of get the idea of, hey, how much time do we have? And the answer really is what the sand is quickly leaving the hourglass. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this holiday week Monday. The Dow, it's up, nothing big, but it's up about 100 points right now. The S&P is up 18. The NASDAQ's up 100. Gold's down 6. Like I said, some light profit. It was actually down, about almost $20 at one point, 1978. Silver is down 25 cents. It's also cut that in half today, $23.60. I think diversification is going to be the key, because I think this bust going to be different. Why is it going to be different? Because I think this ends the 50-plus years of just print more money. Because when we really look at what have we really done, honestly, anytime there's trouble, what is the Fed? They print more money. Let's just print more money. Let's print more money. Now, we knew that printing money would cause inflation. Of course, what did they do to hide the printing of the money? Well, let's just change how we calculate. Let's not even track. We're going to say it's inflation, but it's really not. We'll track something that isn't inflation and try to fool people, and we'll play games. Look at the emergency lending facility for banks. Why? These banks, unfortunately, are insolvent. They should go under. That's what should happen. But no, we want to pretend. They want to pretend. I think the pretending comes to an end this time. And this is why being diversified, making sure you got someone like Joey looking after your money, making sure that you have your gold and silver put away, be your own central bank. I'm begging. And I really shouldn't have to beg, but I'm begging you, because you're going to be glad you did. And lastly, not least, but hey, be even more diversified. Check out somebody like YRefi. Up to 10.25% return. Listen, and I know. Well, Joe, look at the S&P this year. It's doing better than 10%. Look at the NASDAQ. It's doing better than 10%. Yeah, but look at the year before. They were down 30. Besides, I don't think we're going to see these big Wall Street gains of the last 50 years because of their inability to be able to go to the only card they've really ever had. And I think this is kind of the thing about central banks. I think everyone's going to realize, I see now. Yeah, they really did only have one card, and they just played it over and over and over and over again and pretended that they had any sort of control out there. Check out our friends at White. If you've got $50,000 or more, here's the great part. Maybe you got an IRA, maybe you got $1 million in there. Yeah, you want to call, roll it over with Joey. Maybe you take 10% of that and give it to Y-Refi and hey, let me get my 10.25. You can roll over an existing IRA. It's not a penalty. You don't have to pay any fees. You don't have to pay anything like that at all. Check them out. Like I said, the minimum's $50,000. Invest, YRefi.com. That's the word invest, the letter Y, REFY.com. Or call them at 888 Y-Refi 24. And Jason, last week we talked yield curve inversion. This week we talked leading economic indicators. By the way, you know what? There was one positive thing in the indicators. Building permits was up 0.03. The biggest negative contributions. New orders and consumer expectations. Jason, those are probably the two worst things to be negative. And building permits, let's face it, we know how that can be. Building permits, wild swings from month to month. But the one thing the market always does, it does give warnings. It's just whether people want to listen to the warnings or not. And these warnings, unfortunately, they take a while, don't they?
Yeah, they do. They do, and all you can do is take the information that's present and try to make the best understanding of what's going to happen. And so what you're saying is, well, less production. If there's not growth, then there's no growth or there's contraction. So I also saw, Joe, that home supplies are now growing. Right, the supply of homes that are available are starting to grow, which could mean that we could have some drop in the prices of homes depending on what market you are in the country. So it's happening, right, Joe? It's happening. If you're not producing and making new stuff, then that's what's growth. That's what everybody wants. But without that, well, that's when recession shows up, Joe.
Yeah, it's going to be like I said. It's going to be. I don't even want to call it interesting because it's not going to be interesting. It's going to be bad. And listen, these things happen for a reason. Think about how Wall Street trades. Most of it's all computers. It's algorithm. It's formulas. And they're based on, they're not guessing. These are long established historical patterns that we're talking about. And we know exactly how all of this ends. John Rubino, go to allamericangold.com. We got the whole interview. He was on USA Watchdog. Greg Hunter, by the way, such a great program. But Rubino started talking about the spending that's happening when we think about what the government's doing right now. So we know for a fact we're going to be well over $2 trillion in debt in 2024. And Jason, this is non-crisis. Do you know that this year's debt, 2024, and I know you're saying, but Joe, it's only 2023. Fiscal year 2024 started in October for the government. Outside of, and I want to say it was the first big COVID year. I don't know if that was 2020. I want to say 2020. This year's 2024's deficit will be the largest deficit on record. And it'll be within earshot of that COVID deficit. Think about that. Bigger than the financial crisis. Bigger than the financial crisis, quantitative easing, bailouts, Iraq, Afghanistan. Remember, all of that was happening at the same time. We are running crisis-level deficits when it's not a crisis. And this just tells you how bad the problem really is going to be. And to make it worse, and again, I'm going to blame the Fed here. How did the government get on this? 15 years of zero. Do you know that the government was paying less in interest when the deficit was 10 trillion? Or, I'm sorry, when the deficit was 20 trillion than when it was 10 trillion? Yeah, that's a fact. So you're like, wait a minute. I added $10 trillion of debt. I doubled the debt. And my interest payments went down? Yeah, that's what happened. And what happened? Well, they just got used to it, Jason, right? They're like, well, look at what they do. Oh, we're just going to keep spending the same.
Well, 0%, right? That's what 0% does for you. 0% lending gets you a lot more money for a lot less interest, but that's all over with. And Joe, I was talking to you briefly about the reverse repo draining out. It looks like it's possible to be done by January. Boy. And there's a very real situation to where, Fed or not, the 10-year note, 30-year note, all these just go skyrocketing upward in February. So what's going to happen to that deficit, that debt, in February when the Fed can't stop the rates from going up? Because that looks like what we're headed for.
Yeah. So Jason this morning gave me an update. Late last week, the government admitted in the banks and the Treasury and the FDIC, okay, the reverse, remember, we've been talking about this reverse repo for pretty much all year, okay? And I know people's like, reverse repo, I don't know what this means. You don't need to know. What it was, very simply, all the excess liquidity the Fed had created and the government had created sat on banks' balance sheets. At the end of December last year, so December 2022, there was $2.5 trillion of extra money. And see what they did, and this really should, and it chaps my hide. I don't know about anybody else. This makes me so upset. The Fed was paying the banks interest every day, not to loan it. Right, to make their balance sheets look really good. And I'm talking billions. Tens of billions of dollars in interest. By June of this year, so you fast forward 6 months, it was at $2 trillion. So they're like, oh, wow, that's $500 billion in 6 months. That was the good news. We just got an updated number over the weekend. See, we're way ahead of the news. They'll report this later. The reverse repos are now at $800 billion, or just below $800 billion. And again, remember they had $2 trillion at the end of June. So fast forward, and we're not even 5 months later.
Right.
And there's only $800 billion left. Look, I'm gonna draw a map for you. Ready? Okay. Yield curve inversion will set a record in February. Okay. That'll be an all-time record. Take out the Great Depression. Take out the financial crisis. Leading economic indicators will take out the record. February 2024. The reverse repos will be out of money February 2024. Jason, I think I got the X that marks the spot, if you know what I'm saying.
Yeah, February looks to be when things start to happen, and it's interesting because you try to look at politics, because that's just a controlled bunch of dudes, and the money controls those people, and they got this new, majority, the majority of the House leader, and suddenly he just looks like he's just like McCarthy, and it's like, wait, I thought he was going to be different. The federal government will be put a lot of weight on them to not borrow any more money when this repo ends. So my feeling is, Joe, he'll act like he's going to strut around. We're not spending anything more. He'll do this at the end of January. Remember in January? They pushed the budget out to January. See how the timing is?
Yep.
And then he's going to stick his chest out. We're not borrowing no more money. Well, it's because the Fed's not going to want them to borrow any more money because that's going to push the interest rates. So
that's the
he's
other
going to
one,
strut
right?
around. He's going to strut around, yeah.
That's the fourth one, right? Because they kicked the can down to January, February. They've got to come up with some form of a spending plan. And why is that bad for rates? And the answer is right now to keep interest rates. And let's look. The 10-year note right now. And again, remember, the 10-year note's down because the Fed's done raising. At least that's what I believe. A lot of smart people believe. And right now it's at 4.47, 4.48. Because they've been spending all that reverse repo money buying up the amount of debt that we have. And when that money runs out, there's less to buy, right? Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour. The low end of the market, what I like to call the low end of the market. There's all kinds of gold and people, all different ways to confuse you. We don't like that. We take that right out. You can buy graded gold. Now, graded gold, I guess, could make sense on the pre-1933 stuff because people actually used it. So you could imagine, right, a gold coin, and it got used. Let's just say a Liberty from 1866, right? I mean, it got used in 1866, 67, 68, 69, all the way up through 1933. Obviously, it would stand to reason, right? That there would be some coins would be uglier than others. Some coins would have more bag marks or less bag marks, scratches, worn, all of those things. So I guess you could say, yeah, well, and when they grade coins, like anything else, like baseball cards now, everything's graded. It's all about condition, right? That's what they tell you. Condition, condition, condition. We think it's all about gold. Yeah, do we have? You go on allamericangold.com. We've got graded gold listed there. We don't sell it very often, but we have it there. We're actually pretty affordable in that area, but we're about collecting ounces and staying private. And those are the two things we care about here: ounces and privacy. Being able to buy it, sell it, trade it, not have to give out your Social Security number, not have to worry about 1099s. And that's kind of where we sit. Well, this morning, the largest wholesaler in the world, they've got offices in Hong Kong. They've got offices in Shanghai. They've got offices in Berlin. They've got offices in Paris, in London. I mean, they're everywhere. Said that, hey, by the way, those $20 gold pieces you guys love, we don't got any. They've got more expensive ones. The graded ones, the better shaped ones. Yeah, well, okay. That's why we do what we're going to do right now. $10 Liberties. These are the half ounce. 1 through 19 at $1,075. You buy 20 or more at $1,065. So, I mean, Jason, even at $1,075, that's $2,150. That's a great deal. Gold's $1,975. You buy 20 or more You're taking your ounce cost down to $2,130 if you're buying 20 or more. And that's the kind of value. That's what we love. Not only can you get more ounces, you get the best price, and you stay private. 800-951-0592. And when we think about February, that's not far. I mean, it's holidays, right? Thanksgiving, Christmas, New Year's. Everybody wants to shut it down. I get it. I want to shut it down. This has always been historically, when are the best periods to buy gold? Usually we have a pullback in the summer, right, where everyone's on vacation. The buying gets a little slower. Premiums come down. Now, the gold price doesn't always come down, but the premiums come down. And then, Jason, as we know, right, holidays. Right? Everyone's thinking about other stuff, and I'm flying out the family. We got to get gifts. We're doing that. We're going to go skiing. We're going to whatever it is you're going to do. Those are the two best buying opportunities. And Jason, this special today, and we said we'd heat it up all holiday season long. The closest to spot, once again, last week we had one real close to spot. Today, another one really close to spot, $10 Liberties, 1 through 19, 1,075, 20 or more at 1,065, as we've got economic indicators, inversion of the yield curve, the emptying of the repo, the government having to kick the can down the road again. Jason, it's all converging to say the market is going to have a lot of debt that they need to digest with the least amount of money yet. And think about it, we're already having trouble selling it now.
Correct. We've this has been going on all year long, Joe. Slowly but surely, the thirst for U.S. Treasuries has gone down, and we're heading in for this recession. And the rates are higher. They're doing everything they can to make it a little more appealing, right? You know, higher rates is the only way to go. They could up those rates up to 6, 7, 8, 9%. You'll get some buyers. But the crashing and the burning of the recession that's coming is something that they can't ignore. Also, they got to keep the inflation down. And yep. Joe, man, I was in the grocery store this weekend. I heard a couple of ladies. They ran into each other. You could tell they hadn't run into each other for a long time, and they started talking groceries. You know, one lady's asking the other lady, "Hey, do you have a job where you work that I can get a job?" You know, she's already working a job. It's just, you know, it's outwardly, it's out in the open, people talking about it, Joe. The inflation's just not going away. And if this is going to continue, which I think it will next year, the inflation, after the recession comes in, we'll get a cooling of the inflation. I think this thing comes back hard. I don't know what anyone's thinking that, you know, these guys in the market's thinking that the inflation's gone or it's under control. It's just not, Joe. It's just not. And this is 2024 is going to be crazy.
Yeah, I'm thinking this is probably what Jamie Dimon already knows. Because, you know, Jamie Dimon says people aren't ready. Rates are still going to go higher regardless if the Fed is raising or not. And I think this is maybe what he's circling here, which is, hey, when all of this money dries up, what are we going to do, right? How are we going to keep rates down? I mean, think about it looks like in just a little over a year, 13, 14 months, $2.5 trillion evaporated, gone out of the reverse repos. Now, some of that is, listen, revenues are down. Companies, hey, yeah, I'm making money. I'm just not making as much as I did last year. Right? They've got less deposits on hand. The consumer, well, my bank account at the end of every month, a little less and a little less and a little less and a little less. And then, of course, obviously, the rest of it is being used to buy all this government. Oh, by the way, there's one other thing that comes in February. We'll talk about that one when we return. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Monday. The buying season extravaganza, $10 liberties, 1 through 19, 1,075, 20 or more at 1,065. You know, at 1,065, you're talking about $2,130. You know, gold's here, pushing up now, $1,980. I mean, it's like $150. That's nothing, right? I mean, that's just nothing over spot. I mean, that's like 7.5% over spot. Right?
Yeah, I mean, you know, when you get...
And you don't buy gold for spot. You know, that's the thing. If this is something physical, you don't buy gold for spot. Nobody buys gold for spot.
In the future, Joe, when gold prices start to lift above record levels and the buying gets heated up really hot, we could see premiums over an ounce be $300, $400, $500, $600, $700. Gold at $4,000, for example, and it will get there. You could have potentially $1,000 premium on gold. That means a $5,000 ounce of gold
just 10%
spots $4,000.
over at $4,000 is $400, right?
$400.
$400.
That's right.
I mean, that's just 10% over. That's nothing. 800-951-0592. Something else happens in February. Jeez, what could it be? Oh, yeah. Remember the Treasury Department? See, their checkbook keeps running out of money, right? So they had to do a special $112 billion sale of bonds, right, added to the debt in December. And then they said, oh, by the way, in the first quarter, in what looks like it'll be February, they're going to have another special auction. But this time, Jason, it's not going to be $112 billion. The number that I'm seeing is approaching $150 billion, right? And you think about, well, how did the reverse repo, lose $200 billion in like a week? Well, let's see. The Treasury auction, I know where $112 billion of it went real fast, right? Without that, they're going to be, I think, February, and probably after New Year's, because everybody, all the stuff we're talking about today, come January on the TV, they'll start talking about it then, Jason. But, of course, by that time, it's really too late to do anything.
Yeah, Joe, and I've seen the it's starting to see different numbers. You know, the official reverse repo number I saw was $912 billion, a little higher, but I've also seen a couple of guys are saying, yeah, it's not there. You know, now I wonder if they're reporting the actual number there, because that's what's cash is left available for this system in this tightening cycle. So the $800 billion is what a lot of prognosticators are saying. The number that they release is $912 billion. But either way, Joe, I still know the $100 billion that's drained out. So it's like this. It's like you only watch the cartoon.
What I see with these numbers, they're weeks behind, right? They're saying, hey, here's the number today, but this number actually applied to October, right? I mean, but it's the 20th of November, right? Those types of things. So it'll be interesting. But there's no doubt the pattern is clear. Whether, you know, and of course, think about this. We're talking about $100 billion. That's nothing. $100 billion. That's nothing. The government is auctioning almost $100 billion a day in debt. So it goes pretty fast.
It can go really fast, Joe. And January, sometime in January was when it's kind of looking like it's going to end, but sometimes when these things accelerate, Joe, we could have Christmas and it could be already gone, right? And I'm telling you, people that have money sitting there in a bank account or having it stuffed under a mattress somewhere, you're losing the money with the inflation. And if you're waiting to buy gold, that's just not a smart move. It's if you want to buy a little at a time, great, buy a little at a time, but you should not be having it sit there. It's just cash is just such a bad thing to hold. Obviously, you have the emergency cash there and the money that's in your accounts to help pay your bills. You're not going to buy gold, try to turn around and sell it in a week and make a profit. That's not how gold works. But other than that money, Joe, it should be somewhere else. Anywhere else that it can make money, and gold and silver is just the easiest one. Because if inflation heats back up, which it will next year, you're going to be happy that gold is what you're holding, because gold will go up before the inflation really hits hard, Joe. It's a leading indicator normally. And next few months are going to be incredible.
Gold's going up, and we talk about inflation, but you got to remember, people get confused. Inflation's the printing of money.
That's right.
Gold's going up because we've printed too much. And now we're having a hard time financing it. And listen, we're better than Japan. Okay, great. Does that help us? No. Right. Japan goes, we go, right? I mean, it doesn't really matter. And this is kind of, listen, talk to any banker that actually knows what he's talking about. They'll all tell you, oh, yeah, well, that's what fiat money's designed to do. That's the system. And it's been the system since the Chinese created fiat money, which is always the problem. Well, eventually you just print too much and nobody wants it anymore. And this is kind of where the globe sits in the U.S. Treasury right now, whether you like it or not. We printed too much, and people don't want as much of it anymore, and it's starting to cause a problem. And what we're highlighting is the problem really very abruptly gets worse come February. That's all. Do what you will with that information. Patriot Radio News Hour, final segment coming up. $9510592 Patriot Radio News Hour, Joe and Jason on this Monday. Hey, make sure you get out there. Go out to YouTube or Rumble. Oh, no, wait. Yeah, or Rumble, I'm sorry. YouTube and or Rumble. Just search Patriot Trading Group and we'll come up. Make sure you like this. Give us a thumbs up. Leave a comment. But more importantly, share it with your friends. Let people know what's coming so you can be prepared. And all of these signs, guys, well, I lost track. What is that, half a dozen signs that say, hey, things change drastically in February. $10 liberties today. 1 through 19 at 1,075. 20 or more at 1,065. At 800-951-0592. Right now, gold's down $7.1978. Silver's down 25 cents, $23.60. And Jason, again, not a lot of economic data. It's a short week. We'll be here tomorrow. We'll be leaving early on Wednesday, then closed Thursday and Friday, and then we won't be back till Monday.
Yeah, short week this week for the holiday. We'll probably have the same thing in Christmas time, but this doesn't mean you have to check out when it comes to minding your stacking. You can buy some silver, you can buy some gold, something else, depending on how much of a silver and gold buyer you are. Sometimes you get into Thanksgiving times, and different people like to shop for Christmas at different times. And I'll tell you, a little 1/10 ounce gold eagle or a piece of silver, great stocking stuffers, great presents, really. You can buy somebody some junky thing for $30, or you can get them an ounce of silver. Right, Joe? I mean, I'll tell you right now, the ounce of silver, you're going to get thanked twice.
Those, you've got a Trumper in your family, get one of those Trump coins. We'll have something, too. Jason and I were putting something together that something little, that you can give under the tree for you, whether it's the kids, the grandkids, significant others. But today it's $10 liberties, 1 through 19, 1,075, 20 or more at 1,065. Remember, get out there, get out to Rumble, get out to YouTube, subscribe to our page, give us the thumbs up, share it with your friends so everybody, you know what, so they can get ready too. And it's something where this is a simple one, right? All of these things converging, and I keep going back to Jamie. Jamie Dimon tends to haunt me a little bit because he's one of those guys. He's a banker, so I despise him greatly. And his company, I'm not kidding, every year admits to robbing people. They've gotten more felony convictions. I think they're up to like 8 felony convictions in the last 8 years. But somehow Jamie Dimon never knows anything about it. But I guess that's just how it works. But when he was talking about most people will not be prepared for what he thinks is coming in 2024. Why do I think February is one of these things that he's talking about as the catalyst to whatever it is that he thinks is coming, Jason?
Yeah, Joe, exactly. And like those two ladies at the grocery store, I was overhearing their conversation. I mean, I kind of wanted to jump in, but the one thing I was going to say is, well, I know that things are tough, ladies, but next year, much worse. Better hold on tight, right, Joe? And I just didn't want to make it worse.
800-951-0592. Tell you, sometimes that's just better, not making it worse. Don't make it worse. You know what? When you buy gold and silver, it never makes it worse.